I'm Albert Liu, and as we continue our preview of the 46th Annual New Orleans Investment Conference, it's my pleasure to welcome back Mr. Peter Schiff, the Chief Economist and Global Strategist of Euro-Pacific Capital. Great to see you again, Peter. How are you?
I am doing well. Great to be here with you.
Lots to talk about. As usual, I don't know what we want to start with. The Fed says they're going to hold rates low until at least 2023. I know Goldman thinks it's going to be at least until 2025. You probably think it's going to be a lot longer than that. We can talk about that. We also have a fight right now trying to get another COVID stimulus through. Gold and the stock market reacting to that this morning. What are your thoughts on both of those, Peter?
Well, first of all, as far as rates go, the Fed is going to keep them at zero as long as they possibly can get away with it. So whether they can get away with it to 2023 or 2025 remains to be seen. But eventually, the Fed is going to be forced to allow rates to rise, even though it doesn't want rates to rise, because otherwise the dollar is going to completely collapse and the country is going to be decimated by stagflation. So ultimately, the Fed's going to have a very difficult choice to make: allow the dollar to collapse and inflation to run rampant, or do something to prevent that from happening by letting rates go up. But when they finally let rates go up, then the entire house of cards that they've created comes tumbling down. The stock market crashes, the bond market crashes, the housing market crashes, and the government has to start slashing spending on everything and maybe even defaulting on its debt. So it's going to be a tremendous financial crisis when the Fed finally does the right thing, which is why they will resist doing the right thing for as long as they possibly can. Now, as far as the COVID stimulus, it's not really stimulus. It sedates the real economy. All the Fed does is stimulate asset prices, and it stimulates more consumption, but it doesn't stimulate any production. In fact, it subsidizes the lack of production. It makes it easier for people to stay at home and not work. And therefore, they don't produce. They don't help create goods. They don't provide services. And so we simply run larger trade deficits, which are already hitting record highs, to import the stuff that we don't make. And all of this is going to compound the problems for the dollar that ultimately will force the Fed's hand.
Peter, one of the ways that they can continue keeping rates low is to continue getting low readings on inflation, because that's what's ultimately going to force them to raise interest rates. So we have sort of the way that they measure interest rates biased to underestimate what's going on with inflation. But then you also have this new language where they've changed the targets. They're talking about symmetrical or average inflation overshooting. Are we actually going to see PCE go up to 3% now instead of 2%?
Well, it's going to go a lot higher than that. I mean, basically, the Fed is saying that they are targeting an inflation rate that is sufficiently above 2% to average out all the prior years when it was below 2% to get a 2% average. And since we were below 2% for so long, they can even have inflation running at 5, 6, 7% for a few years and still claim that it's not enough, because it still doesn't average out to 2%, going back in time. But the only reason the Fed is doing this is to lay the foundation to accept and prepare the nation for a much higher increase in the cost of living without any pressure on the Fed to do anything to stop it.
I kind of feel like this would be as if my kids asked for an average bedtime of 9 p.m. and then chose to measure it in like Hawaii Standard Time, where we live in California. It's kind of cheating. But every time there's mention of a stimulus, anytime we get closer to having a stimulus, stocks rally. I'm wondering if this can continue, and if not, who's going to get left out? Because you see the FANGs benefiting, but what about these like cyclical, discretionary, these types of businesses, restaurants, travel, and commercial real estate as another example of a sector that may not benefit from this? Who's going to get left out even if the stimulus keeps working?
Well, there's a lot of people who are left out, but the stimulus doesn't actually help Main Street, and it doesn't help real businesses that generate real earnings. It helps a lot of these momentum stocks, a lot of the NASDAQ stocks that trade at such inflated multiples to their earnings that what they're actually earning is very immaterial. It's just people are looking to buy these stocks because they're going up, and the more cheap money that's supplied, the more of it is there to bid these prices up. And also, ironically, some of the most overvalued stocks, these so-called COVID stay-at-home stocks, the more the Fed weakens the economy with its stimulus, the more the benefit these stay-at-home COVID stocks have. Because the worse it is on Main Street, the better it is for these e-commerce type companies that don't depend on actual, real life business. So as businesses are imploding in retail, all the real restaurants or the stores that sell, or any kind of businesses that are not remote and online, that simply fuels the speculation into all these stocks that perceive to benefit from this transition, to a cyber economy. But none of this benefits the actual economy. In fact, it does the reverse. What we really need is for the government to pull back on all the stimulus. The government has to cut spending, so the government is a smaller burden on the economy. The government has to free resources up back into the private sector to utilize those resources more productively. And we can't simply try to maintain these asset bubbles. But that's really all that happens with the Fed stimulus, is that the stock market goes up. But the Fed looks at that as a victory because it believes that what drives the economic train is the wealth effect associated with the stock market. But that's not true.
Peter, what's more true, that the stock market is overvalued, or what we're seeing in the U.S. indexes is just a generation or longer bubble in the U.S. dollar deflating?
Well, the stock market is overvalued. I mean, there's no question about that. But the U.S. dollar is probably more overvalued. So ultimately, the dollar is going to fall further than the stock market, which means that in terms of dollars, you could still see higher stock prices. But in terms of real money, in terms of gold, you're going to see the price of U.S. stocks collapsing. The price of everything is going to go down in terms of gold, as the price of everything goes up in terms of dollars.
Long ago, you said, the Dow is going to match gold at one point. Do you still hold that as a target?
I do. And of course, right now, they're still far apart, where the Dow is around 28,000, something like that, 29,000, and gold is around 2,000. So they got a ways to go before they meet. But I think they will. The only question is, what's the number going to be? Will they meet at 10,000? Will they meet at 20,000? Will they meet at 50,000? There's no way to really know. But what's the most important is not that where they're going to meet, but that they're going to meet.
Let's move away from the stock market, Peter. Just think about the economy. Some economists thought the economy was fine prior to 2020, and that what we're seeing is strictly a COVID recession or depression. You've all along said that the economy was fragile. I'm wondering what you think if we come up with a cure with COVID, a scientific or medical cure. What goes back to the way it was and what doesn't?
Well, yeah, I think it was not only not fine, I think it was a disaster waiting to happen. It was a bubble. And in fact, you've got Donald Trump pretending that the economy pre-COVID was the greatest economy in the history of the world. And that statement is not even close to being true. It's not even the greatest economy in the history of America, not even close. But the reason that COVID inflicted so much harm on the U.S. economy, or not even just COVID itself, but our response to COVID, was because the economy was so vulnerable prior to COVID. We had nothing saved for a rainy day. And then not only did it rain, it poured. And so we didn't have the resources to deal with the shutdown. Had we really had a strong economy, the way Trump claimed, businesses would have been flush with cash. They would have been able to weather a few months without revenue. The same thing for their employees. They would have had ample savings to draw on. They could have gone several months without paychecks and still be able to pay their rent or their mortgage or make their car payments or things like that. But because everybody was so levered up, because companies had so much debt, because their employees were living paycheck to paycheck, that's why this was so disruptive. Now, thus far, we've been able to make up all the lost income with a printing press. But there's a big difference between earning money by producing goods and services and just collecting a check where the government prints money and you don't do anything. And so the only thing that's supporting this now is that the dollar hasn't crashed. In fact, the dollar actually rose a little bit initially as the COVID crisis began. But I think when the bottom drops out of the dollar, that's when we're going to really experience the pain of this recession, because the cost of living is going to go way up. And it doesn't matter. I mean, sure, there will be some net short-term boost to whatever the situation happens to be if we actually get a cure or a viable vaccine for COVID. But that's not going to cure what ails the economy. What ails the economy goes way beyond COVID. And COVID at best was the pin, but the air was already coming out of the bubble before COVID. Remember, the Fed had reversed course. We had 3 rate cuts in 2019. The Fed had already gone back to QE, though they didn't acknowledge that that's what it was, but that's what they were doing. So the air was coming out of the bubble before COVID put an even bigger hole in it.
Peter, one of the things that we're going to be left with, just like after 9/11, we were left with the TSA. After this crisis ends, we're going to be left, I think, with bailout culture, with states being bailed out, extended unemployment benefits. That seems to be a problem. So I want to get your take on what consequence that's going to hold for the U.S. And also, I know you like to look abroad for opportunities. Where in the world are they not doing this? Where should we be looking?
Yeah, certainly we're going to suffer way beyond the health effects of COVID. We've already got a lot of bad legislation with increased mandates for a paid family and medical leave, which are going to, undermine businesses further, raise the cost of labor, result in, lower compensation for workers to make up for all the added mandated family and medical leave. And yeah, the extended unemployment benefits, that's already been enacted. But I also think that a lot more rules and regulations are going to be imposed on business to supposedly protect us, not just from COVID, but from future viruses. So after 9/11, we ended up with all sorts of added security measures, right? I mean, so life is a lot more difficult. I mean, not just at airports where it's the most visible, where you're waiting in those long lines, but a lot of office buildings, you go in there, you just can't go upstairs. You got to check in, you got to get an ID, you got to go, we have so much more security now than we did before 9/11. And all of that, exacts a cost. We have to pay for that. And so if we're going to spend money on security, where's that money coming from? It's money that could have been spent someplace else, but we needed to spend it on security. So I think the same thing is going to happen post-COVID. Businesses are going to have to spend a lot of money. The government's going to have to spend a lot of money keeping workers safe, keeping customers safe. So all this added costs are going to have to be, borne by consumers ultimately of these goods and services as businesses become less efficient because of all the added costs of all the social distancing and the products and the things they need to do. I mean, think of all these businesses. You just look at a restaurant, for example, when they have to limit capacity to 50% or 25%. Well, that means the 25% who are there have to cover all the overhead of the restaurant, and now the overhead is higher because of the added things they have to do to keep everything, clean. I mean, I just got my teeth cleaned today. When I got to the dentist, they had to buy all sorts of extra equipment to keep the room more sterile, and they have to space out their patients, and so people are doing less business, so they have to make more money from the fewer customers that they have. So everything is going to get more expensive as a result of this. And of course, the government has already usurped all sorts of additional power. And I'm not talking about just the federal government. Look at all the things that the various state governments are doing as far as these mandates where they're forcing businesses to shut, forcing people to stay at home, or forcing people to wear masks, right? I mean, once upon a time, Americans wouldn't have stood for any of this, right? What about your individual freedom and your liberty? But the government has forced us to surrender this in order to protect us from this virus. But so we've grown government, just like the government got a lot bigger after 9/11. We got the Patriot Act, which is still, massively undermining our productivity today with needless additional regulatory burdens throughout our whole banking system. that is making it inefficient, and the whole brokerage industry of which I'm a part. The Patriot Act never would have been passed but for 9/11, because nobody would have voted for it. But because of the hysteria surrounding 9/11, and they were able to label a very unpatriotic piece of legislation, the Patriot Act, that's how they got it through. And once the government gets new power, they never surrender it, right? And so I don't think any of these new powers that are being grabbed in the aftermath of COVID are going to be surrendered. That's one of the reasons the government wants to, overblow COVID, make it a bigger threat than it really is, because that way they scare the public into accepting all this new government control and power.
Peter, are there investment opportunities in countries like Sweden or other countries that took a different approach to the COVID problem?
Yeah, I mean, Sweden was kind of unique in its handoff approach. I mean, they didn't shut down anything. And really, I mean, and as far as I can tell, they're doing fine. I mean, they have COVID, but, there are plenty of countries in Europe that really clamp down that have a lot more COVID than Sweden. And, I think ultimately Sweden made a better decision because, Sweden is its own country. They don't have, a central bank other than their own central bank to bail them out. And I think they looked at the economic costs and weighed that versus the health benefits and came to a more rational decision. I think in the US and in a lot of European countries that think they can rely on somebody else, we just figured, hey, we'll focus on the health benefits and ignore the economic costs, because the Fed is going to cover those costs. Whatever money we don't make, the Fed will just print. And that's exactly what happened. I mean, even though you had states ordering people to stay at home, they weren't missing out on any income. In fact, a lot of people who lost their jobs because of COVID ended up benefiting financially, because the money they got from the government, the checks they were getting from the government, were larger than the ones they got from their employers. So to a large extent, the government, the federal government, the Federal Reserve, helped to insulate the states from the negative economic consequences of their decisions. Therefore, their decisions were skewed towards the health benefits of staying at home. But I think if the US government and the Fed would have made it clear from the beginning that there will be no help from the Fed, that there will be no money printing and no supplemental unemployment, that to the extent that a state wants to shut businesses and furlough workers, the state needs to deal with the consequences on its own. I think had that been made clear, we would have approached this crisis from a very different perspective, and I think it would have done a lot less damage to the economy. And I don't even know if the extra health cost would have been that high, because there were a lot of illnesses that were related to problems created by the shutdown. So it's hard to say whether we actually had a health benefit from what we did.
Yeah, you're right, Peter. And the sources I talked to said the insurance companies were not preparing for something really big, more like an exaggerated flu season. But I want to touch on something. You said that, the American economy was in trouble even before COVID. Another region that was in trouble was the EU, especially its banking sector. And that was a union that was literally coming apart. They can't be doing well, given how hard hit a lot of those countries are. We stopped talking about it because now all we talk about is COVID. But again, the EU and the banking sector in particular, is that going to be a problem?
Yeah, again, it's just kind of the same thing in that you have all these separate countries begging their neighbors. Everybody assumes they're going to push off the cost on somebody else, and you've got the ECB there that is able to, do its own QE program and buy up all these government bonds to support all this reckless fiscal policy to try to offset the damage done not only by COVID but by the governments themselves for their implementation of all these shutdowns, as a response to COVID. But I do think that of all the countries, it seems to me that the United States has had the worst response as far as the economic damage we've inflicted. I mean, look at the enormity of our budget deficits now compared to what they were before COVID. I mean, government's tax revenue has imploded. as spending has exploded. The government now prints more money than it collects in taxes. I mean, this is an unprecedented development. Something like 60% or 60 cents out of every federal dollar spent is basically borrowed from the Fed, which means, it's printed. And that's how we are financing the country through inflation. And that trend is only going to accelerate in the years ahead. I think tax revenue is going to be a smaller and smaller part of the spending pie. And, this makes it easier for politicians to enact more spending programs if the public is under the false impression that they're free. I mean, the Democrats will talk about, well, we'll tax the rich, but the amount of revenue that you can actually get from the rich is small compared to what they want to spend. And the idea is that, well, the rest of it is free. It's not free. It's going to come at a heavy price. It's going to destroy the value of everybody's savings, of everybody's paychecks. And so the cost of living is going to go way up, and people are going to pay for all this government through inflation, through a diminished quality of life or standard of living, because everything they need to buy is going to be a lot more expensive, which means people are going to buy a lot less because they can't afford it anymore.
Peter, running out of time here, but for these last few minutes, I have another question for you. Leading up to the last crisis, you were known as a dollar bear, as a U.S. stock market bear. That's how you were known. That's how you were booked. Now, leading up to this crisis, you've kind of become the go-to person for cryptocurrency bear. You've been very vocal about it, especially Bitcoin. And you come up with many good arguments. The debates are always good. So the question I want to ask you is different, though. It's about more of your philosophy. I know you're a libertarian. I know you're a advocate of free money and free banking. Why so hard on Bitcoin?
Yeah, well, first of all, I might have been known as a stock market bear, but I really wasn't a stock market bear. I was a dollar bear. I thought that U.S. stocks would probably go up because the dollar would go down so much that nominal prices for stocks, along with everything else, would go up. So, and I was advocating that people buy stocks, just not in the United States. I was trying to get people to buy stocks in other countries that I thought fundamentally were in better shape. And I thought those stocks would also benefit from the falling value of the dollar. And for many years, that was not the case. Although more recently, those forecasts are starting to pay off and come true. And I've always been a bull on gold, for some time now. And, now gold has gotten out of that correction that we're in for many years. And, now we're, back above 1900, and we've been above 2000, and we're headed much higher. But when it comes to cryptocurrencies, and I'm not, Bitcoin isn't, different than any of the other cryptos. So I'm not particularly hard on Bitcoin. I mean, I'm hard on all the cryptocurrencies. I don't think any of them have any value, not just Bitcoin. I don't believe that Bitcoin is digital gold. So I don't think that it's some kind of a replacement for gold, or certainly not an improvement on gold. It's fool's gold. And yes, I believe in the free market. And I'm not saying that people can't buy Bitcoin if they don't want to. I'm not saying that government should ban Bitcoin or any cryptocurrencies. If people are foolish enough to buy them, they can buy them. But I don't think that they will succeed in the long run, because I don't believe that any of the cryptocurrencies, or Bitcoin, will deliver on the promise of being money. I don't think it's being utilized as money now. I mean, it's certainly not a medium of exchange. It's not a unit of account. It's not used really in commerce. I mean, people use Bitcoin as a speculative vehicle. People buy it and hold on to it because they think it's going to appreciate. Now, a speculation that people are making is that one day in the future, Bitcoin will function as money. That right now it's not, because nobody wants to spend it because it's going to be so valuable one day. You just want to hoard it. But in the future, the idea is that it will circulate. I just don't even think that's possible. Even if the volatility were to go away, which I don't think it will, I think the cost of actually using Bitcoin in commerce, as far as all the energy that would be consumed to facilitate all those transactions, makes it prohibitively high. Now, maybe someone could say, well, maybe they'll invent some new method in the future that will bring down those costs. I mean, that's a wild speculation. But I think ultimately what is going to undo Bitcoin is that it is not a store of value. That is the problem. People say, well, it's a store of value like gold. Well, the difference is gold has real value that can be stored. Gold is the most useful metal in the world. I mean, the biggest demand is for jewelry, but it also has a lot of industrial demand. It's the best conductor of electricity. It's used in aerospace and dentistry. It is a real good that has value, and you can store that value because gold doesn't decay, right? You can have gold, you can bury it in the ground, and dig it up 1,000 years later, and it's exactly the way it was when you buried it. Even if it's on the bottom of the ocean, you can pull it back up. But there's nothing you can do with Bitcoin. Bitcoin has never been a commodity. It's never been used for itself. And so it has no actual value that you can store because you can't do anything with Bitcoin in the future. The only value that it has is as a speculative asset. You can buy Bitcoin today and based on the belief that you can sell it to somebody else in the future who's going to pay you a higher price, but that's it. I mean, so once the momentum goes out of Bitcoin, once it really starts to drop, then I think the party's over. Then there's no reason to own it, and then everybody wants to get out, but there's no real user. There's no real buyer to support the market like there would be in gold. Central banks are buying gold as a monetary asset. As I said, the jewelry industry uses gold. There's all sorts of real-world buyers for your gold. They don't exist for Bitcoin. Once the speculative frenzy is over, you're just a bag holder if you haven't sold your Bitcoin. So yeah, Bitcoin has been good to people who got in really early and who have already sold and made their profits or who are in the process of selling. But I think all of the gains that were enjoyed by the people who got in early and got out will end up being the losses of the people who got in early and never got out, or the people who got in late. Right. So this is a pyramid scheme in every sense of the word. So that's why I don't recommend it.
Yeah, and those are all compelling arguments, Peter. And I shared your skepticism when I first learned about it, but that was, I don't know, 7, 8 years. I don't know how long it's been. Bitcoin is still around. It's trading at thousands of dollars, maybe 10,000. I don't keep track. There are financial products made around this thing. And I think what a lot of people are missing, I think anyone who wants to compare Bitcoin with gold is missing the aspect of time, because this is a natural currency. It's not a fiat currency. It has to evolve just like gold did. That can take hundreds and hundreds of years. So it's like looking at a baby and saying, well, that's not a human being. You don't have a job. You're not procreating. You're not doing all those things. Well, it's just a baby. I think Bitcoin is a baby. And in terms of utility, the first person who picked up gold probably just picked it up because it was shiny. Way back in the day, they probably didn't have, their tooth drilled out and needed it filled. They weren't designing a printed circuit board. They weren't going into space. They weren't doing, all of these applications we have for gold. They were not doing. They probably just picked it up because it was shiny. And I think Bitcoin actually is almost still in that shiny object phase where people think it's interesting, it's unique. It has properties that, we haven't seen before. I mean, there are other cryptos too, but as a class, they bring something different. And so I think it's that shiny object stage, but the utility, I think, could come and is coming.
Well, the problem is, Bitcoin isn't a shiny object. I mean, they try to portray it as a coin, that's a golden color with a B on it. But in reality, that's not what it is. And gold is unique in that the properties that gold has as a metal are not shared by other metals. But the properties that Bitcoin has can be shared by an infinite number of cryptocurrencies that can be created or that have already been created. The only thing that's unique about Bitcoin is that it's the only cryptocurrency that's called Bitcoin. But, other cryptocurrencies can have different names, but basically do the same thing. Now, yes, you can build infrastructure that maybe recognizes Bitcoin, but none of the other thousands of coins that compete with it. But ultimately, I don't think that gives Bitcoin such an advantage that you could say that, it's got some kind of monopoly on this. If cryptocurrencies ultimately prove successful, that Bitcoin is going to enjoy a monopoly, or that it'll even be around at the end. I do think that to the extent that cryptocurrencies end up being used, it's going to be because they're tied to something real. I mean, I look at Bitcoin as a fiat cryptocurrency, just like the dollar is a fiat currency. A real currency would be a paper currency backed by money, gold or silver. So I think to the extent that you have cryptocurrencies backed by gold, then they wouldn't be a fiat cryptocurrency like Bitcoin, but a legitimate cryptocurrency like the dollar used to be when it was convertible into gold. So I think that's more of a viable future than that the world simply moves from fiat paper currency to fiat cryptocurrency. I don't care if it's issued by a private company as opposed to the government. The nature is fiat in that it doesn't have any real value based on its utility. All of its value comes from confidence. And confidence is very easy to lose. That's the problem.
Right. So, and I was using shiny sort of in a metaphorical or analogous way, in that it is blockchain is technologically shiny, and that it's interesting. But I like to ask you, Peter, if the commodity-backed argument aside, because a lot of things can become legit if they're backed by some type of commodity. But if 10 years from now, Bitcoin is still around, trading at some stable, non-zero price relative to gold and US dollar, and it's not backed by anything, it's really just become a commodity currency, would you change your mind about it in 10 years?
Yeah, well, I've told people that whether Bitcoin succeeds or not, in my mind, is not a function of price. Right? Although I personally think that Bitcoin will have a lower price in 10 years than it has today. Even if that is not the case, if it's simply the same group of people holding on to the same Bitcoin that they've been hoarding all those years, I don't think that changes anything. I mean, if I were to see Bitcoin actually, being used as money, if you went to e-commerce sites and they actually priced their products in Satoshis, right? If that was the currency, the medium of exchange, if you actually had landlords and tenants negotiating leases where the rent was paid in Bitcoin, right? Where you had insurance products where you paid Bitcoin premiums and received Bitcoin benefits, where you had a bond market in Bitcoin, where investors borrowed Bitcoin and promised to repay Bitcoin, right? If Bitcoin really started to work like a currency, like the dollar or the euro or the yen, if I saw a real market for Bitcoin and it really functioned in that way, then I would change my mind and say, this thing actually works. It's actually, the public has actually accepted it as money. It's being used as a medium of exchange, as a medium of deferred payment. It's serving all the functions that other currencies serve. But until any of that happens, it's just a speculative mania. And you never know how long a bubble can inflate before it collapses. Now, personally, looking back at the charts, I think Bitcoin peaked in December of 2017. I don't think Bitcoin's going back to 20,000. I think that was the end of it. Now, it's possible that that wasn't the end. Maybe the bubble will get bigger. But at this point, I think that's up to the Bitcoin bulls to prove that. Because as of right now, they have no proof that that wasn't the top. Because we haven't come close to it anytime since. I mean, we're just above 10,000. So we're about 50% below where we were in December of 2015 or 17. Meanwhile, look at how much gold has gone up since that time period. So Bitcoin has not followed the price of gold. Look at what's happened with the explosion of QE now and COVID and all the money printing and all this stuff that has happened. None of it was enough to cause Bitcoin to make a new high, like gold made a new high. And so you got to ask yourself, if all this bullish news came out and Bitcoin still couldn't make a new high, what's it going to take? Right? I think that, well, if it couldn't make a new high on this, it's never going to make a new high. The next thing is for it to make a new low, which obviously, I don't think look at the new low from, zero, but the low in 2018, I think, was around 3,200, 3,300. I think we're more likely to go below that than to get back above 20,000. And then the question is, and I try to ask the Bitcoin guys, what are you going to do then? Bitcoin goes to 3,000, 2,000, 1,000. What are you going to do? Are you going to give up? Are you going to throw in the towel and admit you were wrong? Or are you just going to hold on to it indefinitely, claiming that, well, it's still way up from the bottom, I mean, the Bitcoin guys can always say how much Bitcoin is up if you bought it for a penny, right? You can always go back to the beginning and say, hey, it's the best performing asset. That's true. Even when Bitcoin goes back to 100, you can still say, but it's 100 times a dollar. Yes, that may be true. But at some point, you have to realize that the party is over. So that's the onus, I think, is on Bitcoin to kind of prove that I'm wrong, that the bubble hasn't peaked.
Okay, still a chance one day we'll have Bitcoin demand deposits at Euro Pacific Bank. So we'll just hold out for that. Peter, some of those behaviors that you're talking about and describing investors in Bitcoin could also be attributed to people who invest in gold, meaning the dedication, the willingness to hold no matter what. I'm wondering if gold goes crazy, at what point would you say that, okay, gold is in a bubble? At what price? And you can do that in US dollars or relative to the Dow. At what price would you say, okay, gold is actually in a bubble now and it's time to get out?
Yeah, well, as I said, 1-to-1 with the US stock market, I would say that that's very expensive gold. I mean, gold has been at that level before, but it has represent an extreme in the price of gold relative to the Dow. So to the extent that we get a 1-to-1 relationship again, I think it would be smart to sell sell gold and buy US stocks. But again, that may depend on, if we're a complete socialist country where all the gains or all the profits have been nationalized, then, it may not be US stocks that you end up buying. It may just be foreign stocks that you buy, because the US stocks may not even be a buy at that point. If the whole nature of the country has shifted and we're just a totalitarian society. But sure, I mean, everything generally could become a bubble at the end of a long bull market. I think the real bubble might end up being in the mining stocks, gold and silver mining stocks. I think they will lend themselves to a bubble more than the physical metal. So I think that bubble could get really, really big. I mean, I'm prepared for that now because I own a lot of these stocks. And hopefully I am smart enough when they do become a bubble to recognize that and take my profits. But I think we're a long way off at this point from a bubble. I mean, I still think we're climbing a wall of worry. I think there's more fear in the gold stock market than there is greed right now. So we're still early in the game. And so I think the attendees to the New Orleans conference, I mean, there's a lot of good gold companies there. We have our own gold fund as well that we manage. And I think that is the real investment opportunity right now. By the time we're in a bubble in gold stocks, I mean, the New Orleans conference is going to be sold out event. I mean, you're going to have to rent a bigger venue. These hotels that we normally go to are going to be too small. We're going to have to use the Superdome over there in New Orleans. And then when that happens, then it's probably the peak.
I would love that, Peter. And that's a great discussion. We'll have that at the conference. That is mining stocks. It's a great start to this bull market and lots more to come, we believe. So I want to invite everyone to come see Peter at the 46th Annual New Orleans Investment Conference. We'll both be there October 14th through 17th online. Details at neworleansconference.com. Peter, I kept you longer than we discussed, so thank you very much. And I can't wait to see you there.
All right, take care.